Welcome back to Fast Market, everyone. Kevin Hinks back with Alex Coffee. Time now for our cash tag segment. Now I'd like to bring in Mr. Andy Swan. He is the co-founder of LikeFolio.com. Andy, I'm looking at your data here on mentions volume for Uber versus Lyft, and these are Google search-like numbers, Andy. You're getting towards 90% of this market. Is this turning into a one-horse race?
Yeah, I think the one-horse race is over at this point. You know, when we used to talk about these two companies, Uber versus Lyft, it would be something that, you know, we were talking about a pretty significant battle. But what Uber was able to do, you know, through COVID, because they were delivering meals and goods when people weren't moving, they really just kind of dominated that app download, that app user experience to the point that it became by far consumers' number one pick. It's the first place that they're going to go. And then Lyft is kind of secondary if you can't get an Uber. That's the way it feels. That's what the data is showing us. You know, it's absolute domination by Uber. Much the same way we talked about Spotify yesterday versus its peers. You know, Uber's just won this race, and we think it's a good race to win. We think, you know, Uber as a last mile logistics company really makes a lot of sense. It seems like Wall Street's waking up to this. And so, you know, we see this as a one-horse race in terms of moving people. Uber's on its way in terms of taking on DoorDash and delivering food. So overall, we love Uber long-term.
Andy, what does that mean for the other players in this space? I know DoorDash is still in a pretty strong position. Within food delivery, we know, as you just talked about, Lyft's kind of dire situation. I would think that it's in all of these companies' best interest for them to survive, although there could be consolidation and partnerships on the names that are not named Uber. Where does this go from here? Because isn't Uber in a situation where if it delivers that final knockout punch to a company like Lyft, it's in sort of that monopoly, antitrust kind of world where it doesn't necessarily want to go either?
Yeah, it is. And you start to think about, you know, the regulators are already coming for these companies in a lot of ways in terms of, you know, delivery fees, in terms of the way that they structure their employment contracts. You make a good point, Alex. I think it might be in Uber's best interest to kind of let Lyft live, you know, and not be considered a monopoly from a regulatory standpoint. But, you know, that's not my area of expertise. That's not what LikeFolio tries to bring to the table. What we can bring to the table is that from a consumer experience standpoint, from a consumer demand standpoint, when it comes to moving people, Uber is basically a monopoly. And on the other side of the coin, when it comes to moving goods, food, meals, Uber is in a very, very competitive race with DoorDash. And so the one thing DoorDash has going for it, you know, they have virtually zero, if not zero debt. They are completely funded by their shareholders. So they don't have any of the big trip ups, the big, you know, the big hurdles to get over like Lyft did. So Uber can't just push them out of the way through pricing and that sort of thing. So I think ultimately Uber versus DoorDash becomes the ultimate story, because I do think that moving objects, whether that's food or packages, is ultimately the more profitable route to go than moving people. And so I think Uber versus DoorDash is now the new story. Uber versus Lyft is old news. Uber has shown itself to be an exceptional at executing on a long-term vision. And I think Wall Street's starting to catch up to that long-term vision and how huge that whole autonomous revolution and last mile logistics could be. So for Uber, we see, you know, multi-fold type of gains possible into the future, even though in the short term, the stock looks potentially a little bit overbought.
Andy, one last thing before we let you go. If you, in your opinion, what do you think? Remember, we talked about this company forever as something struggling to turn profitable. What do you think it was the key metric that helped them profitable? Was it expenses? Was it higher price? Was it just more volume? What do you think it is that got them from unprofitable to profitable as a lesson for all these other companies trying to do the same thing?
Yeah, they actually kind of executed on that venture cap. Every pitch deck that a venture capitalist sees shows hockey stick growth, and our expenses won't always keep up with our revenues. And I think Uber executed on that. They were able to level off expenses as revenues kept growing. And I really think that it all really kind of came down to the COVID tipping point. I think that once COVID hit and they had, that alternate revenue stream of bringing in people who just wanted food or some goods delivered to them and didn't need to go anywhere. That put one of their competitors very much in the rearview mirror and allowed them to focus on monetizing the users that they had in a lot of different ways, which Lyft couldn't do. And so I think that was the big key, was that they were able to expand the dollars per user that they had without spending so much to get every single user.
Remember, there were the theories when all this was playing out, how the Lyft, the smaller U.S.-based company, probably had a better chance because Uber was so big. Wrong again, everybody.
Yeah.
Andy Swan, thanks for coming on, as always, sharing the LikeFolio data with us. Have a great day, Andy.
Thank you, you too.
All right, Alex.
It's funny that was a theory, because it's natural that scale was the only thing that